Okay, so in this video, I'm thinking, why don't I go over all my trades from um, March, considering I highly doubt I'm going to make any more trades in the next 2 days. So today, tomorrow, Thursday, last few days of March trading. I doubt that's going to happen based on the market here. So let me go through all my trades. I want I want you guys to learn a lot here because I see so many posts saying this stock looks good. This stock looks good. And it all looks like shit. And I tell people it looks like shit, but ultimately um you're not going to learn. You're not going to learn. So, in the month of March, I made um close, just like a few decimals off, $40 a contract across however many contracts I traded this month was a decent amount. So that's a lot. Let's go through every single trade I made this month, and I'll tell you why I made it. We're gonna not even look at the SPY M5 chart. We're gonna only look at the daily chart, and it's gonna be easy. So we're gonna focus on daily charts here. I trade mainly off daily charts. This is not gonna be difficult. So first trade we have here is a day trade. The only day trade I really took that I went in with the intention of it being a day trade, which was on CRM. So I'm still in the process of perfecting my day trading technique. So it's kind of something that's on the back burner a little bit for me because I'm really focusing on just making money. So here's with CRM. I took it on March 1st. As you can see, we have a significant move above the previous day's candle and the previous day's candle was an earnings reaction. So I saw that and I thought, okay, like I said in my previous video, it's nowhere near the 8 EMA. So, like I said, those trades are not bad inherently, but they're not what I want for a swing. They're cool for day trading. That's about it for me. And as you can see, based on what happened after the March 1st candle, the next day, little consolidation above the halfway point, sell off, consolidation. We're not back at that. We're almost in April. So, like I said, I have reasons of why I decided to not swing positions like that. And this is a perfect illustration of why that is. So I took $1.2 a contract on this position. Um, that's about all I can say about that. It was a good trade. Let's see what happened on March 1st here. Okay, so like I said before, what do I like to see? I like to see a move above the previous day's high in SPY. There we've got on March 1st, a nice breakout to all-time highs. So, of course I had to get in some positions. CRM was a nice one. I took 3 positions on March 1st. The next one is ASML. Actually, all 3 of them I closed that day. But these other ones I was willing to hold longer. So ASML was a large breakout here coming off of the 8 EMA after quite a long compression here. Bounced back and forth, couldn't get through this high. Finally did with massive volume. I was looking for, I believe, $12 profit on the position, but I ended up taking 10 because I had 10 coming into the close, and I thought, man, that's a lot. So let me take $10 profit. So I did. I took a $10.1 profit on that position, and that was a beautiful trade. Great move above the compression. We already talked about what SPY did that day, but as you can see here, like if I did hold it as a swing, which all of all of the check boxes are checked here. We got the move off the D180 EMA, we got the breakout, we got the move above the previous day's high, we've got no resistance in sight. I mean, nothing I can see. Let's see what price is that. That is 982. Let's look at the weekly. 982. Yeah, I mean, looks like that's all-time highs. So there's no D1 resistance in sight. Great trade. Perfect. Okay. Next trade was Netflix. Okay, let's see here. So Netflix. Yep, another nice breakout above these highs here off of the D18 EMA. I made $1.75 on my contracts on this one. That was a nice move. Sometimes I I think what I'm going to do is I'm going to talk about another way that I take profits on these positions. Not take profits, but how I define my targets, other than what I've spoken about in my previous videos. But I want to do a little bit more research on it first because I don't know I don't know everything about it, even though I'm using it, which is not really something you should be doing. But before I go ahead and teach it to everybody, I'm definitely going to make sure I know what the hell I'm talking about. But as you can see here, March 1st, another great breakout, nice move. Can't complain about $1.75 on a position. I took it, as you can see, again, it opened higher. The high, let's see, what's the high on March 1st? High on March 1st, 620. 28. The high on March 4th, which was Monday, was 624.42. So had I held that overnight, would have been another nice gap open. I didn't. That's fine. I missed out on some money there, but that's okay because I'm not sweating it. Okay, so the next day I took a trade on was March 4th, which is a Monday, and it was JPM. So first, let's look at what SPY did on March 4th. So there was an initial move above the high, which is why I was able to take that trade. And then it created a hammer, which was a bit unfortunate, but what are you going to do, right? Sometimes that happens. I really try to time it so I'm not in a position where I take that trade and then SPY reverses back below the previous day's high, and then I'm like, fuck, I kind of wish that didn't happen. And you can do that by watching price action. You can do that by seeing if it tests that area first. There's a lot of ways to confirm that it's going to stay above higher, but you can't always be right. But still, I did make money on this trade. So let's look at March 4th. So as you can see here, we've got an origination on the D18 EMA again, and we've got a move above the previous two highs here on February 29th and on March 1st. So that was a good trade. I like that one. Again, not the most ideal on the SPY chart here, but hey, it happens. It still ended up being a good trade. It looks like I took profit on the 5th, which was this day, and I made 90 cents on my contract. So that was a decent trade. The next trade I made was on March 6th, and that was ABBV. So let's first look at the SPY chart here. What do we have on March 6th? We have a open around the high of March 5th, and then we have a nice move a little bit higher. Again, same situation as March 4th. It looks like it did pull back, but it did work out. But again, I don't like that setup. Now, something to take note of here is that March 1st, how many positions did I take? I took 3. I ended up closing them all same day. Some of that's luck, some of it's not. March 4th, what happened? I took 1 position. Why did I take 1 position? Well, I took 1 position, and then, I don't go bang, 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 let me just take all my positions at once, because I'm looking at a lot at once. I'm not just looking at one thing at once. But it's, Pete talks in his videos, Pete from One Option, which you should check out if you are somehow finding this video not knowing about him, but you should check him out. But he talks about how under certain market conditions you want to lower your size. The way I trade, I don't lower my size, but I reduced my positions. So, for example, on March 1st, I took 3 positions. On this day, I took 1 because the market didn't show strength long enough, and the other positions I was looking at, market didn't support it, and I didn't end up taking them. I don't have those written down of what I was looking at on that day, but who knows. And March 5th was, based on my rule set, was a good day to short, but I am not really a fan of shorting this move up. And at the time, I was feeling more bullish than I was feeling around here, which I started getting a little bit bearish. And I'll talk about that later in the video. So anyway, March 6th, that's the ABBV trade. Yeah, okay, let's find where that is. Okay, so we have a move off the D18 EMA here, breakout above all these highs. Nice move. It looks like I closed that same day for only 60 cents. So it looks like I wasn't looking for that much on that move. And, that makes sense. I don't know if this is one of the automatic trend lines called 10TL here. I always use those. I'm not sure if that was there beforehand or not. But regardless, I must have saw some resistance here because 60 cents is pretty small to take on a position like that, honestly. But regardless, that was a winning trade. I'll take it. Okay, next. We have 3-7. I took Amazon. Okay, so let's look at Amazon. And let's look at 3-7. Okay, so March 7th, we have a nice move to another all-time high, breakout above previous day's highs, breakout above the March 4th high. Nice move. What was Amazon doing on March 7th? Amazon was doing a quick little move here. I was looking for a very small move. I remember this trade. So we have a move off the D18 EMA here. And the reason why I felt like I could take this, usually I would say, you know what, this is kind of quite a bit of overhead horizontal resistance. But I looked at the AVWAP-E, which is AVWAP earnings, and I thought, you know what, this probably has a decent amount of support here. And, worst case scenario, I'll watch the AVWAP-E and, I'll trade off that, whatever. And I'm just going to look for like something like right here. Or maybe I was looking right here. Probably was looking right there. Because I did close it on the 8th. I closed on the 8th for a 70-cent profit. And that makes sense given I probably took it at the higher end of this candle and then closed it up there. So that wasn't a bad trade. Definitely a tighter trade. As you can see with the market compressing here, the ranges are going to get compressed, especially with these large market cap stocks that tend to move the market. They've been compressing lately. You can see that in a stock like Meta. You can see that in a stock like Microsoft. Clearly, you can see that in a stock like Amazon right here. So, that's just something to take note of. So, next trade was, looks like the previous week, I had taken I just notated it wrong in my journal because I forgot to enter it. So I don't actually know what day I took this trade, but I'm fairly confident I took it the first week of March. So I took a McDonald's bullish put spread. So let's talk about that. If I remember correctly, I was looking at the 290 level, which is it needed to stay above the 290 level in order for me to profit. So that was somewhere around, that was right here. Okay, so I need to stay above that level. So here's the thing. I guess I've never talked about bullish put spreads on my YouTube channel before, so let me just quickly explain those for anyone who doesn't know. So basically, a bullish put spread is exactly what it is. It's using puts in a way where you're expecting a bullish move or ideally a neutral move. So it's more of like a passive way to take advantage of maybe a slow but still with a bullish slant market. So let's ignore all this price action because that was not there at the time. So let's look at first week of March. We're looking right here. So as you can see, this has been in quite the compression here. If you want to look, you can say like, okay, the 290 level is right around AVWAP-E. That looks like it could be a solid level to build a position around. So you sell a put on the 290 strike. And let me check really quick. I forget what the exact structure is. I don't make these trades very often, quite honestly, so don't judge me too much for looking it up really quick. Okay, it's not in that. I've got it somewhere. There it is. Okay, so we sell close to the... Okay, so that means I probably sold a put, or I bought a put below 290. I believe that's correct. Let me just check really quick. I don't think that's correct, actually. Or no, it is. The reason why I get confused is because the options chain is it's inverted on my broker, so that's why I got a little bit confused. As you go down, it gets higher, and as you go up, it gets lower. So that's why I got confused. Sorry about that. But anyway, so the way that works is as decay happens, as you get closer to expiration, the short strike of the of the spread is going to grow in value, and if the position is fairly neutral, the long puts are hopefully going to stay close to the value of what you bought them for. They're not going to, but they're going to basically not be able to keep up with the short puts. So you end up being able to sell the position for a profit if the stock goes up or if it stays neutral. So I, as you can see here, it ended up selling off pretty hard, but I actually took a profit on this. What day here? Let me see. On 312, right there. At the high, I took my profit. I don't have it in front of me. I took 50 cents on the spread, but I don't have in front of me what the percentage was, which is usually how you look at that. If I remember correctly, it was somewhere between 70 and 80%, which is usually what I try to go for on those positions. But regardless, that is that trade, and that is why it worked, and that's how it worked, and that's how the trade is set up to work. The reason why it's a little bit more complicated to explain that is because most of my trades are directional, so it's easy. It's like, okay, SPY did this, stock did this, here's what happened, etc. So my next trade was on 312. I made a lot of trades on 312, so we're going to have a busy day on 312 here. My first trade was IBM. And looks like I closed most of them on 312 besides one. Or nope, that one doesn't count. Those are covered calls. I'm not going to get into those. So 312. What happened on 312? Okay, so looks like 312 was a nice move off from an establishment of support on March 11th. So I guess there was just a lot of opportunity on that day because I went pretty crazy. So let's see here. 312, nice move off D18 EMA. I can tell you right off looking at this chart, my target was right there. Right at the open of March 7th. So I made $1 on that trade. Very nice profit. Meta was my next trade on 312. Let's see. This one. This is interesting, actually. Meta. This is a very interesting trade. You know, I see exactly what I did here, I think. I got in, and as you can see, I've talked about this before. I'm not the biggest fan of taking it when the candle's in the middle of the D18 EMA, but I'll do it if I'm feeling it. I was probably targeting this level right here, based off from these prior candles where it sold off from. It's probably targeting that, which it roughly got to. I made $2.50 on that position. Very nice. My next trade on 312 was Visa. So that was, let's see here, 312. That was a nice move. Wow, really nice move. I actually should have held that to the next day. I was probably spooked by this candle here. I like to see like free and clear. It's a little bit more annoying when there's price action because you never know where resistance is going to come in these kind of candles. Like, I kind of look at the open a lot of the times. So that's probably what I did actually. Um, so Visa, I made 65 cents on my contracts on that position, closed at same day. All these I've mentioned so far, I've closed them same day. I actually closed all of these same day. That wasn't my original intention. That's just what happened. So my next position was Netflix. So Netflix on 312. So looks like that was another one similar to the Meta one we just discussed. I know I was targeting probably somewhere around here. Um, that was a good trade because this is just a good day trade, honestly, because this is such a tight compression in here. The reality is you have to be able to look at a stock like this and say, I see this pocket of strength today, and I really need to get out of it today. So this was a riskier trade because, not like I said, but day trades are just always inherently more risky because if it's a day trade, you're going in with the thought that I need to exit this today. If you don't exit it today, that's a problem. Then you're turning day trades into swing trades and slippery slope. So that was a good one. I made $1.80 on my contracts on that position. So that was a nice one. And then my final trade on 312 was NVIDIA. So NVIDIA, 312. That's 19, that's 12. Okay. So, it's an interesting one. I'm just trying to remember what my thought process was on this. You know what? Oh, yes, I remember exactly what happened here. Okay, so the stock was looking strong all day, the whole day. Um, and then in the last 30 minutes of the market, and you can look this up, I'm not going to scroll back now, but like you can look this up. On March 12th, Nvidia decided to just jump like $10 in the last like 30 minutes to an hour of the market. And I was looking at it all day and I thought, you know what? This looks solid for a swing. I'm going to take it right here. And then after it jumped $10, I'm like, you know what? Maybe I'll just take it. And the reason why I did that is because at this time, I wasn't feeling like the market had a lot more to give. I was feeling like I don't know why I was feeling this way. All I can tell you is this. Um, when you've been trading long enough, when you've had enough screen time in the market, you tend to get these gut feelings that tell you, hey, you know, don't get too aggressive here. Maybe just take your foot off the gas a bit, especially with such a crazy day as March 12th was. I really wasn't feeling like go fucking nuts bullish. So I ended up closing that the same day. I took profit on it in the last maybe 15 minutes of the market being open. I took a $7 profit on that position, so that was very nice. I was very happy with that. Now the next day is a weird day, very weird day because I just glanced up at those trades. It was a very weird day. So let me explain my thought process on this, and I'll actually go through a few mistakes because I made a couple mistakes on this day, and they're very, very easy to explain. So first trade we're going to go through is Tesla. So Tesla, everyone's favorite stock to trade. I took puts on 314. Okay, as you can see, nice breakdown, right? Now, here's the problem. So 314, as you can see, is a move below the previous day. Nothing wrong with that. My analysis was perfect. Here's the problem. I bailed on this position. I had a decent profit actually, but I bailed on it. My profit was my target was quite a bit more than I actually made. And why did I bail? It's a very, very interesting, or not interesting, but important question. Why did I bail on this position? Honestly, I think it's just because it's Tesla. You know, the thing about Tesla is that trading this stock is kind of like playing Russian roulette sometimes. You know, you look at the chart and it looks fairly normal. But when trading it, you know, anyone that has a lot of experience trading who watches this video will probably know what I'm talking about. I was short, and I'm looking at this stock and I'm looking at the price action, and it's like, yes, it's going down, but it's so choppy. Like on the intraday chart, it's so choppy, and every single dip, it seems like there's buying there. And it's like, I'm looking at this actively and I'm thinking, you know what? Maybe I should just get out. So I did. I got out for a 40-cent profit on my position. Ultimately, what happened was I was wrong. That was fear, and my target did get hit on that position. The stock did hit exactly where I thought it would. And had I stayed in that position instead of a 40-cent profit, I think it would have been like $1 or two, or at least $1.50, which would have been huge. Um, but I did not stay in that position. I chickened out on that. Now the next trade was kind of related to Tesla. I took Google. I took Google long actually on the 14th. The reason being is I thought to myself and I thought, huh, I want to be balanced if I'm in Tesla. Tesla's terrifying. Let me find the strongest stock in the market today and stick in it. And that was Google. And as soon as I bailed on Tesla, I bailed on Google. I took a 6-cent profit. Not 60 cents. You heard that right. I took a 6-cent profit. So basically break even. Just to like get my cards off the table because I just wasn't feeling right in this market. Now, granted, you can look at this here and say, the next day, you know, you can imagine I felt smart. I felt, hey, look at me. I was right to take that off the table, but then I felt like a fucking idiot on the 18th when it gapped up $1 million. Not a million, but you see what I'm saying. It's a huge gap up. And it's like, nice. Sick. What an idiot. You could never predict that. And ultimately, the decisions I made were right in the moment, but I probably should never have taken Google to balance things out because balancing things is bullshit. And then Tesla, I should not have taken that because, or I shouldn't have gotten out. I should have stuck with it because what the hell? This is like amateur hour with my trading. So, you know, those were some major mistakes, but the most major mistake of this month is the next trade. The next trade is the most major mistake, is my last mistake of the month, but it's a major one. It's not good because it created a loss, and quite the big one. I already made it up, so it's fine, but very, 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 very frustrating. So I'll explain this trade. So it was March 14th, same day, so we know this is the day where the market pulls back a little bit. I was feeling bearish here because, you know, we had this big engulfing. We haven't gotten above it. Still hadn't gotten above it. We were selling off. I was like, okay, you know, maybe I should get a little bearish, a little tiny bit bearish, a little bit. And this was after Google. This was after Tesla. I was out of both positions. And I looked at this and I was like, damn, this is a candle, and this is a channel. This is nice. It's a nice short. Let me short it, and let me target. Let me see if I can remember. I think, yeah, 3260. Let me target 3260. Then what happens? Little candle, starts selling off here. what happens? We get to 32.60. What do? I look at my contracts. I see my profit. I see it's about 20 cents short of where it should be. And I think to myself, okay, I got hit by decay a little bit. Okay. It'll probably keep going lower. Let me hold out for that extra 20 cents. You can see what happened. March 20 happened. I took the loss on March 20. That was rough. That was really rough. That was the first time I made that mistake in a long time. The mistake of greed. The mistake of, you know what your profit target is. The stock, in fact, hits that profit target. And you're still in it. What are you doing? Why are you still in it? You had profit. You hit your target. What are you doing? That was a really bad trade on my part. March 15th. I take the Annette bullish put spread, ANET, that Dave took. I liked it. I was like, hell yeah, let's take it. I took like 70 or 80% on this, I think. Or I think it was like 80. I think I took like 80% on this day. And then, oh yeah, let me tell you what day I got out of AFR. Oh, I know I did. I took it March 20. So the 15th, I took the Annette bullish put spread, and then I sold on the 20th. Yep. So yeah, that's all correct. The 18th. Oh, the market doesn't matter as much for that. We know it's generally bullish. Okay, so the 18th, I took meta calls. So the 18th, again, we got that gap up. We're above the previous day's high. Yes, it looks like shit. Probably shouldn't have taken meta, but I did it anyway, and it did fine, so whatever. So meta, I took that on the, what did I say? I took that on the 18th. So here we've got, it's above the D18 EMA. I was targeting right here. I figured, you know what? That's a nice little move to what were we looking at? 500? Yeah, I was looking for 500. I was like, that's a tiny little move. I bet it can tick up to that and I'll get it right away. I sold that position for a $3 profit on the 20th. So that's this nice candle here. The 20th was another big day. What was the 20th? 20th was FOMC day. That was the day I sold AFRM for a loss. It ticked back up. It screwed me, or I screwed myself more accurately. So on the 20th, I took 3 positions. None of them I closed that day. All of them I closed the next day, except for one. I'm still in it. Tell that to you in a second. So CAT. I took that on the 20th. As you can see, nice move off the D18 EMA. Breakout above these 2 candles, nice move. Same as we talked about earlier in the month, back in business again. And as you can see on the 20th, very nice breakout here as well. So that was a nice trade. I made $1.25 on my contracts. The next position is, we'll go over this one, but I'm still in it. So I'm in meta still. So 320, as you can see, I took profit on that day on 320 on my other meta calls, got back in more calls. You can say, oh, why didn't you exit here? Very easy answer. My target was 314. Sorry, not 314, 514. We hit 515. Okay. Why are you still in it? Very simple answer. I had my contracts in to sell, and the bid actually got above my limit order. It was above it. I should have been filled. I did not get filled. That is why I'm still in the position. I didn't get filled. Fucking annoying. So I actually should be out of this position for a fat gain, but of course I'm not. Shit happens. Annoying, but whatever. It's still bullish chart. I'm still in it. Whatever. Annette, very good trade. Like I said, I sold the BPS on that day, or I bought it back, whatever you want to say. It's technically bought it back, whatever. This was a very nice trade. I got in after the FOMC. As you can see, nice move, nice breakout above here. And then I sold it up here at the open for a nearly $4 gain. Very nice move. Love to see that. My last trade of the month was Airbnb. I did a day trade on it. I bought it on 321, sold it same day for 90 cents. In and out, easy. And that is my last trade of the month. As you can see, a big gap up on 321, so didn't really want to take more than that, but I could justify it taking it because it was above the previous day's high. So, go over all my trades I listed in this video, all of them, and tell me something very simple. What do you notice about all of the stocks? Just fucking scroll through the whole video. What do you notice about all these stocks? Where are they located on the D1? Are they down here? No. Are they down here? No. Are they down here? No. They're up. They're way up. They're way up. They're chilling. Up in the sky. You know. They are doing great. So I just made a living for the month doing that. Why the fuck would you trade anything else? Why do you need to trade shit stocks that are like beaten to hell? You don't. Learn something from this. This is what I traded this month. Figure out on paper how to do that for yourself. Because I can guarantee you that, you know, you might see someone who's a professional trader take something like, let me think. You might see them take a position like, oh, let's take a position here. You got to think to yourself, what's the probability on this position? What are they risking? What's the upside? What, like, is this the bread and butter, or is this the sprinkles on top of the icing on top of the cake? Because that's what this is. This position is unlikely to profit. This is like a 30% probability position. You know what this probability is here? You know what this probability is? It's 90. How do I know it's 90? Well, my win rate for the month is over 90%. I have one loss this month. One. How many trades do I have? Let's see. I have 24 trades this month. I have one loss. So, are you going to trade 90% probability, or are you going to trade 30? Oh, but I have a stop right below support. Okay. Cool. So, it's just chill if you lose money. I can tell you this. When I take trades, I don't want to lose a single fucking dollar. I'll sometimes fuck around with like 1 share or 2 shares on speculative bullshit that I don't care about. I don't sell those motherfuckers until I get profit. Because it's just 1 share. What do I care? But also, I care. I don't want any fucking negatives in my account. So if I don't even want to lose a dollar, why are you going to risk hundreds on a subpar probability setup? Fuck that. Take the 90. Take the 90 every fucking day. Especially people learning. I don't give a fuck how much upside there is. I just listed to you my profit per contract on every one of my fucking positions. Does that sound like I'm making 10 on every trade? No, I'm not. But I was consistent. My profit factor is well over 2. My win rate's well the fuck over 75. It's over 90. And I'm literally showing you how you can make a living. Even, let's assume I use one contract. I didn't, but let's assume. If I used one contract on every single one of my positions this month, I would have made $3,700. Most of you watching this video probably have a job. Does $3,700 extra this month sound pretty nice to you? I would fucking guess it does. I think so. So why are you fucking around with these stupid trades thinking that you're going to be the one that's right? You're going to be the one that picks the bottom. You know, I see there's overhead resistance. You know, it's a good base. It's a good place to buy. Okay, Warren Buffett. Do you have the track record to support that? Have you done the analysis to show that you're right more often than you're not in these situations? Because you better be. You better be hitting at least 75% to make a trade like that. I don't even make trades like that. Why do I need to? You know, I could say, okay, you know, Apple is doing this. Like, I can do a 1/4 position size and, you know, shoot for like a $5 profit. And, you know, that would be a really nice trade, actually. But it's like, do I need to? No, I don't need to. Why do it? You don't need to. In fact, it's only going to hurt you. Just do the trade that's going to make you the most money. And that is going to be consistency. It's like, let me ask you this. Would you rather pick up a $100 bill once a month or pick up a $5 bill every day? Unless you're brain dead, you should have said the $5 bill. Why? I'm not going to explain why. You should fucking know that. So, with that being said, that's how you got to think of trading. You're trying to make an incremental, repeatable, high probability gain every single day. And, you know, that's not possible necessarily. But like as often as you can when probability arises. You're not trying to hit the fucking home run. Relax. Take a breather. Take a break. You don't need the home run. Just hit like a normal batting average. You don't need to try that hard. Just pick the best setups. Do what the statistics support. If you don't have statistics, don't do anything. Paper trade. That way you'll have statistics. I see so many people talking about so many awful setups, and they're like, it's fine. Okay, what statistics support the "it's fine" comment? I would love to know this. You guys get the point at this point. I don't need to go on longer than this. I hope this provides some value because you can take what I explained in this video, you can compare it to how I have explained I look for targets in the past, and I'm sure you guys can see why I took gains when I did, why I took the positions I took. You can figure it out. It's not difficult. The most difficult part about this job is not getting in the way of yourself. What do I mean by that? You'll read something on, like, let's say the Real Day Trading Reddit. You'll listen to my video and you'll think, wow, he's really saying something here. And then you go into the market and you don't do anything that I said. You don't do anything that you read about. You're getting in the way of yourself. Take a fucking break and open your mind to what the reality of this is. The concepts are not that difficult. It's the whole like concept of unlearning your bad habits and relearning good ones and then reinforcing all that and not caring about things like, oh, but this stock ran $10 after I exited. Who fucking cares? How much money did you make? $200. Okay. You just made $200 on your computer and you're complaining? Shut the fuck up. Go out and do something with your money. Have fun. Doesn't matter if you miss the move that happens after you took profit at your technical target. Now, if you violate your rules and you miss a move, beat yourself up over that. That's fair. You should learn to follow your rules. If you have rules for a reason, follow them. But your rules need to be based on statistics. Anyway, I've already tried to end this video once. You guys get the point. If you have any questions, feel free to ask them in the comments. I'll respond to any of them you guys have. You can see in my previous videos, I always respond to comments that, are questions or anything like that. And I hope you guys can figure this out. It's a good life to have trading, but it takes discipline, and you cannot listen to the wrong people, and you need to look at things realistically as opposed to idealistically. So, good luck and good trading.